Last night, Apple reported blowout earnings, pushing the stock back above $600 and helping boost U.S. stock markets early this Wednesday morning. Britain's economy has slipped back into recession, with output contracting by 0.2% in the first 3 months of this year. I'm Lindsey Bell, and the morning call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Lindsey Bell with theStreet, and together we bring you the morning call. Stock futures are pointing up this morning. Part of that is due to a great report out of Apple, but this is just continuing a 3-day rally that we've seen in the market. Is this rally going to continue?
Well, at this point, I think if you're non-committed and you started to buy into support on Monday, you probably sell some. There's still a lot of news out there. Right now we're focusing on earnings, which is good. That's part of the U.S. recovery story. But you saw in the news today that Britain is now in a double-dip recession. The yields on Spain and Italy are still up there. So I wouldn't just go all in right here. As a macro investor, we said stay the course. That we didn't think this recession or this pullback was going to be like last year, 22% off the highs. But 5% so far. Still not sure if that's enough. But some stocks are acting very well, and some need to be avoided for a little while right now.
And today it's going to be important to hear what the Fed has to say. We'll get their new economic forecasts. And going into it, a lot of economists that I've spoken to are pretty positive they think the Fed's going to be a little more positive on the economic outlook.
Yeah, and I think that's important. Typically, trading-wise, the market likes to push a certain direction into the Fed. Mm-hmm. So I think that the last 3 days have been up. So going into the Fed, we could be grinding to the news that comes around at 2 o'clock. I don't think they're going to say anything new. They're going to be accommodative. They'll probably be, neutral to positive on the economy, but not saying that we're out of the woods, because we're not out of the woods. So if you look at the chart here of the SPX, you will see, we've had this nice bounce. Okay, here was that reactionary low from April 10th around 1357. As we came in here on Monday, I said we need to watch that area, see if it holds. It held. So covering some shorts and trading the market, which is what we do, was smart. Okay, so we even actually went long a few things because of that being held there, that double bottom. Then you had this up day yesterday. It was a little lethargic, a little weird, a lot of rotation, but we were still up, and now we're heading into a big resistance area. If you look here, 1382, in my opinion, is pretty big. I think some guys are going to come, if you're long, into this little 3-day move, you sell some here, but then there's going to be that rubber match. I think there's going to be a big rubber match between the bulls and the bears, because if we can negate this right shoulder here, because remember that head and shoulders formation that we've been talking about, this little area of 1388 to 1392 is the zone they're going to want to protect, because if we close above that zone, not saying today, but in the next just a week or so, they're going to have to cover, unless they're just going to be rolling up their shorts and fighting the tape with some opinions and not watching the action.
Yesterday, getting into the sector spotlight, we saw industrials and transportation. Those sectors, they saw some strength, which has been different from what they've seen historically or at the beginning of the year. On Friday, we heard from GE that their industrial sector did really well. And then yesterday, 3M talked positively about their industrial business.
Yeah, so 3M right now, it reacted, I'd say, somewhat positively. It didn't close on the highs, but the market's not actually behaving perfectly. But if you look at the chart of 3M, you will see, it's near the highs of the year. It's above all the moving averages. It's actually behaving pretty well technically. I have not been able to trade it well, as I think it's been pretty sloppy. But overall, for the market, pretty healthy that it's coming right into the old resistance. If this stock could just say hold the gap, okay, I would think that's very important to see that the buy pressure is still there. If it can go sideways and hold the gap, I think it would be healthy for the market and for investors in 3M if it could trade above 89.75 and go. But just like the market's not sure if it's out of the woods, they didn't let it just break out because, again, we're not sure exactly if the green light's there for stocks to make 52-week highs, because in a corrective tape, you need to have excessive strength for that to happen.
Another industrial name, a defensive stock, Lockheed Martin, is what I want to take a look at now. It's been trading kind of near the $90 area, and it's been doing relatively well given that budget cuts are coming up next year. We talked about this one on Monday. What are you seeing in the charts?
I think the chart still looks good, and that just shows you that you have to kind of take the news sometimes out of the stock, because everyone who's just shorting it because saying, oh, we're going to get budget cuts, you know what, maybe we don't get budget cuts because the stock's not telling you you have budget cuts coming up. So if you look here at the chart, you'll see here's a really nice channel. Okay, you had a double bottom here, okay, into that 87 area, and now it's just trending higher. It's above all the moving averages, showing you some accumulation. It's coming into the old highs. So I even think traders who are looking for some type of momentum trade, if it gets above 91.60 and could hold above it and go, you could see a nice breakout move here. And if you're a long-term investor in Lockheed Martin, you're getting rewarded for staying the course because technically it's been acting pretty well.
Caterpillar reported earnings this morning. The stock's trading down, but expectations going into the quarter were pretty high. Last week, Bank of America upgraded the stock to a buy, increasing the price target to 135. The CEO at the end of March was pretty positive on the quarter, so investors were probably a little, this might be they didn't beat and raise like.
Well, it had a nice bounce off of support, and anytime you talk up your earnings, there's going to be huge expectations. That's why we talk about you have to know where your stock came from, where it closed, to know what the street's looking for. So if you look at the chart of Caterpillar, it's been a roller coaster this year, but we talk about not chasing stocks, we talk about entries and exits. Remember way back when this was the time, we said to buy it for a breakout, and then obviously had a good run, and then since then it trickled lower. But what did it do? Look at that. It tested the prior breakout. So that's why if you missed it up here, we said don't chase it. So now on this pullback, some guys bought into the support here, which was around 100, and then you had this nice little descending channel. You look right here, usually these things resolve to the upside because, again, they're trend lines that get broken. If you see on this day, you had a nice wide range bar to break it out of this little channel here, and then since then it's been going sideways. I would say it's down $1 and change. If you're long, I wouldn't get worried. I would trade it long versus this 105. As long as it stays above 105 and continues to go sideways, I think traders will look at another time to play it for some momentum, and that momentum comes in above this area, which is about 109.77. So it might need a little bit more time in here, a little bit more clarity from the market, but then above this 109.75, it could continue.
This morning we also got earnings from Boeing. That one's trading up. It's benefited really from the strength in the aerospace business. Stephanie Link at Action Alerts Plus owns this one. She has an $83 price target on it. It's trading at around 73, closed at 73 last night. And the valuation on this one's good.
This one, fundamentally, she's talked about many times. I've tried to trade it. It hasn't been a great trader for traders, but some things are better as investments and some things are better as trades. You just have to know what you're looking at. And at this point, it does seem as it might be able to break out finally. We've looked at this channel on the chart. You see it. This is what we talk about. Things could be messy and you could be in tier 1 when it's building a base, and look at the size of this channel. Stock has held this entire level, this 70.59 going all the way back from the last time it based here. And now, it's actually opening above this little mini pivot of 74.25. So if it could stay above this 74-ish, it's going to be knocking on the door and getting through this resistance. So the high here on Boeing is around 76, I would say 50 to 60. If it can close above there, that will be good news for the market and good news for Boeing investors that sat patiently, because as a trade, it was hard to be patient.
How about we look at the OIH? We got the last two of the oil field services yesterday, Weatherford and Baker Hughes. But what are you seeing in the chart there?
Well, this stock in the beginning of the year was a nice hold. It was a methodical hold. And you know what? It showed a little relative weakness and it's been trading down, but it still held higher. It hasn't been an energetic trade, OIH is. But at this point, money seems like it's going back there. People are starting to get some confidence as some of these earnings reports come out. If you look here at OIHs, you will see that it definitely is trying to hammer out support in this 38 area. At this point, it's still, it's within the moving averages. It's going to have a lot of resistance here at 41.80. So I do think that there is room to get there. It's got to clear this minor pivot, but then there's going to be a lot of resistance here. I don't think it's going to be like a get up and go crazy move, but as an investor, I think you could be in tier 1 OAHs and then look for relative strength and find some names that you really like.
One name Stephanie Link likes is Schlumberger. She was buying into it earlier in the week after getting out of it a while back. The stock's been really beaten down. The valuation's good. They're a market leader. They're seeing international margins expand. So what does the charts look like?
Well, the chart's finally starting to perk up. I've heard the name Schlumberger so many times, and people love this stock, and they want it to perform. And right now, it looks like it's starting to turn the corner technically. So if you look here at Schlumberger, like Stephanie says, it takes time for bigger institutions to accumulate, and right now they've been accumulating into this 65 area. This 65 area is held many times. Then finally, if you want to draw somewhat of a downtrend, right, here you go. It sort of broke this downtrend when it got above 70, and now it's knocking on the door of these moving averages. So I would say it's looking better. And I do think with a little bit of time, if it could hang out in here, it could be a good trade above this 74.50 area. And then once it gets above that, the highs here is around 80. And I do think that if you want to be long the stock, be long versus huge support that's been holding. And if you want to use a tier system above this 74.5, you could add for some cash flow.
All right. Well, we're going to get into the trenches after this break, and we'll talk about some of the earnings that we've seen.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Let's get right into Apple. Last night they reported a blowout quarter. iPad and iPhone sales were great. China was very strong, and it turns out that the Verizon and AT&T concerns drove the stock down going into earnings were just overblown, and they're representing less of the total sales number for this company.
What's interesting is that everyone was obsessing so much over this stock, and it's been an obsession of mine too because there's been so much action in the past few weeks. But what you have to know is you have to know your time frame. What are you looking out of Apple? Are you an investor? Are you a trader? Are you an options guy? And there was a lot for everyone in the last month or two with this stock. As an investor, yeah, you got a little shaken up, but big deal. It was 10% off the highs, and now it's right back. And if you've owned this thing, you've owned it for a long time, and you're in the money doing well. If you're a trader going into earnings yesterday, I know a lot of guys on the site were looking at the calls. We weren't really looking at puts because who's going to short or buy puts after a 10% move? It just hasn't been the prudent thing to do with Apple. So some guys actually went out and bought the 560 calls and then sold the 590s to actually finance some of the calls. And right now it's at 610, and you muted some of your gains, but get over it. You had a plan. Some guys traded it after hours. After hours was a great trade. If you knew what was going on here, everyone was so concerned over the iPhone numbers, and you heard them, and then you also heard the margins. You were able to buy this thing after hours around 585. If you're a trader, that's where that guy was leaning on it in the first 5 minutes, and then it opened up to 595, and now it's at 610. So there's a lot of different ways to play it. If you look here at the chart, you will see that we are now opening right back to this old prior pivot line. It's above these moving averages. So I would say it would be healthy if it could open up above 600 and stay above 600 and build a new little area to trade against. If you remember the last earnings, okay, it opened up right here and then really actually sold off a little bit, then built a nice little consolidation. You had a gap to actually trade it against, right? Because you said I could buy it here versus the gap, and look at the move that it had. So right around here, I know guys are going to be all over it. If you're going to short it, the way you do it as a trader is like just say it hits a high of 615, pre-market or in the first 15 minutes, and it pulls down to 612. You short a little bit versus that 615, but if it breaks above 615, don't do the cost average game. You cover. And if it hits 620 and you want to try and short it again, then it pulls off 618, you short some there versus 620, and that's how you do it with the plan. If you're looking to buy it, you just don't go buy the open at 610, 611. Let it pull in, let it put a morning pivot in. Maybe it pulls down to 605, comes off it to 607. Then you buy it versus 605, and then at least you have a calculated entry as well. So you need to have a plan to trade Apple as an investment. It's been unbelievable, and congrats to you guys that have stayed the course.
Another tech stock with some news out yesterday was Intel. They introduced their new processor, the Ivy Bridge, and then they also announced that they've cracked into the mobile market with Motorola Mobility and Lenovo. They're going to put their chips in their phones. So what's the stock doing today?
Right now it's still absorbing the earnings release. I'm not going to get so into Intel. I think if you have a tier 1 long term, you'll be fine. Right now it needs a little bit more time to get some momentum. I'll show you the chart real quickly and then we'll move on. It was at the highs going into earnings, so I was expecting a lot. Since then, it's been kind of rolling down. It's below the moving averages. I would just watch this pivot here, 27, 24. If it starts getting below this little area, it could see more downside action. I see major support right around there, and then obviously the moving averages are curling down. So there's going to be resistance for Intel. I would just let it trade. I wouldn't overly get involved because it's going to be very noisy.
Let's talk about retail. That's a sector that got hit yesterday on Coach's earnings. Now, their earnings were pretty solid. There was strength out of China. The North American number was good, but it didn't beat Whispers. And honestly, this stock ran 20% into earnings, and they really needed the beat and raise guidance to show some upside. So the stock was down yesterday.
Yeah, you know, it was down yesterday, but it actually didn't close on the lows. Like you saw Netflix yesterday, it couldn't move off the lows. At least this one closed off the lows. So if you're an investor, you have some new points of references also as a trader. So if you look at the chart here, you will see that, you know, it opened lower into some, oh, look at this line here, some decent support. This is where it flagged the last time and came off the lows. So it's probably going to take some time to build a new base. At least, you know, your support here is 69.54. This is where the gap starts. And I think it would be important to see some sideways action. And then if we could finally trade above yesterday's high, maybe it fills the gap and you get a trade. But for now, I think it's going to need some time. Now, this actually was a little bit of a head and shoulders pattern that wound up triggering, but unfortunately, you know, it got resolved with earnings, so it was hard to trade at this point. You know, it's going to need some time here too. This is going to be a little bit off the radar for now. It goes to the C list.
Some residual action that we saw in retail was in Ralph Lauren. That stock was ended the day around down about 2% or so. Stephanie Link was buying this when it was down 3% because they've got the Olympics that's going to benefit them, investments that are slowing down, the rollout into China is going to be a benefit, and then we've got commodity pressures easing in the second half of the year. So what are the technicals showing on this one?
Well, the technicals actually gave you a sell signal, you know, weeks ago. So if you sold it weeks ago, you have the luxury of potentially buying the dip because that's the way you do it as a money manager. If you look here at the chart, you will see, look at this outside day in RL. Right here, you know, it was acting very well. We talked about it all the time. All of a sudden, you had an outside day. We all know what that is. When it tries to make a new high, closes on the lows. A little bit of a sell signal. Since then, it never came right back above that level. And then if you look at this wide range bar right here, this engulfed this entire move, showing you some more bearish signs. So then you go here, and then all of a sudden it stayed in the lower end of this range. So I think people were leaning to the short side. So now the question is, now that it filled some of this gap, what's next? So I guess as an uncommitted guy, you could be long versus the low here of 162.42. But I don't see a reversal pattern here. I think it's going to take time, and make sure you have that time if you're going to be buying RL, because I'm not going to see any momentum soon.
How about Baidu? They reported they had good earnings last night, but they guided revenues down, so the stock's really trading down big today.
Well, this is the interesting part of Wall Street. Okay, same way Apple is hard to buy up at 610. Baidu might not be the time to sell it between 120 and 125. It just came in from 155. So you need to know how to treat these things, and there's an art to trading them. So if you take a look at Baidu right now, you know, this is what I drew last night, I think, in the recap, saying while it came out that this area support is going to be big, 120 to 125. That is somewhat of the uptrend or trend line to follow, and that's what held after hours. So some guys actually made money because it got down here quickly. So the question is, you know, can it rally off the lows? So I would watch this support. You know, same way with Apple. Okay, this is the way you trade it as a pro. It opens down at 124. Okay, puts in a low 123.50, comes back to 124. If you think it's a good long, you buy 124. You stop as the low of the day. Same way if you think, you know what, I'm going to short it. Let it rally back up to 127, come off to 126, shorted versus at 127, and then maybe it goes down to 120. That's the way to play it, but as an investor, you're in the penalty box for a while now.
Let's get into some quick hits. Why don't we just kick it off with Broadcom? I mean, it's a supplier to Apple. The stock's trading up this morning, too, on the Apple News. What do you think?
I think it's a bounce play. It actually rolled over, and it wasn't really expecting much. It came down with Apple, so it deserves a bounce. If you look here at the chart, you will see, you know, stock actually held this support, and it actually came all the way down to the 200-day, which you never want to see. If you're playing a bounce here, it's going to have a boatload of resistance right into this 36.50, 37 area, so just be careful right around there.
3M's next on our list, but we already talked about that, so let's go right into Lululemon. That stock was down 5% yesterday in an up tape. Maybe it's short covering here? I don't know.
It was down. I mean
short.
Leaning
Yeah.
Well, actually, Evan, who tends to be a bear, guys who followed him on the virtual trade floor, he made a lot of money shorting Lulu yesterday. It's been showing you some signs, like some of the other leaders, of a breakdown. So if you go here to the chart of Lulu, you will see, you know, remember this wide range bar day that we talked about that somewhat controlled the stock. I think we drew this small ascending channel, and then it started rolling over. So at this point, you know, it kind of broke through the 50-day. It's up with the futures. Some guys are probably going to look to potentially short the open here based on the fact that closed near the lows. So at this point, you know, there's big support down here around 65. I'm not really trading it, but there will be guys that see it open up with the futures and short it, and they might even actually add to it if it breaks below yesterday's low. And yesterday's low in Lulu is 69.64 for some continuation.
How about VMware? It's been getting hit the last few days.
Just like the rest of the tech. And when it had great earnings and it couldn't break out and hold the momentum levels, that was your sell signal. Entries and exits. Now that it pulled down, you know, it is probably a decent opportunity. I haven't been trading it as frequently as I have done in the past, but if you look here, you know, this was the earnings day. Okay, this was your sell signal. Remember, it broke through highs and then closed below. Here's an outside day or a shooting star top. And since then, wow. Okay, so at this particular point, it's right back where it broke out. So it could get some type of bounce, but again, you know, it's looking like there's a lot more resistance here versus, you know, support. So I would say 109, 110 you could probably get to, maybe even fills this gap here. But like a lot of these charts that I'm looking at as I go through it makes me a little bit more bearish than bullish. So we'll see how it all works out.
What are you thinking on Amazon going into earnings on Thursday?
Amazon, it's like my nemesis. I can make money intraday. You know, I think the pattern is very, very bearish. Okay, on a macro level, but Amazon always confuses everyone. If you look here at Amazon, I'm probably going to take some puts. I haven't taken puts into any earnings. Okay, usually I take calls if I like the stock and I don't want the risk. But if you look at this monthly chart on Amazon, you know, I'm seeing like this trend line right here that it seems like it could break, and if it does, I think it goes to 140. You go to the weekly chart. I've been trying to get this, you know, trade intraday, and it hasn't happened. It hasn't broken it yet, so it'd be anticipation. But if someone put, you know, a gun to my head and said you have to be long or short into Amazon, I would be short. So my call is short. So I'm going to take some puts and take some risk, you know, but that's up to you.
So we're trending up today, but we've got some news in macro news today that we need to be watching. What's the strategy for today?
Well, I think that they can grind us into the Fed, but I won't be buying it. If we're up 120 today going into the Fed, I'm not a buyer up at 1385, 1390. I'm actually going to look to see if I could fade that, short that. I'm also looking to see if I could short some of the financials. You know, I traded a long JP Morgan on Monday. It showed leadership, held it, sold some yesterday. It's gapping up. You know, if you look at some of these things, just like real quickly, look at Goldman Sachs. You know, you go to the daily chart on it, you'll see that, you know, it came into the 200-day, which it always bounces off of first, and it's going to be coming right into resistance. So I do think that selling this 115, 116 would be prudent if you played it for a bounce, and maybe even looking to get short there. Same way we were talking on JP Morgan. You know, this was the area I bought it for a bounce. Here you got some follow through, and now it's going to be opening up right around here. You know, take some profits there, and maybe even look to get cute for a short, but make sure you have a plan.
All right. Well, be sure to check back in with us later. Scott will give us the daily recap at the end of the day.